Good morning, this is Larry Edelson for my Uncommon Wisdom weekly video market update for Thursday, July 21st. Due to my travel plans, I'm actually recording this on Tuesday evening your time, Wednesday morning my time here in Asia. So if there's a little bit of a discrepancy between the price action I speak of and what happens between Wednesday and Thursday's morning trading session, you'll know why. Again, I'm recording this a little bit early due to my travel plans and work schedule. Let's go right to the gold market. I'm seeing some very interesting action there. Gold did pop up above this resistance line to about 1620 on Monday and Tuesday to new record highs. However, it's failed so far to hold that line, and now that line is acting as resistance. We could go to and fro here. One slight new high to 1630. There's major resistance at 1640, 1650, or we could start rolling over here. The short term, again, we could go a little bit higher or we could trade sideways. I do not see an explosive rally to 1700, 2000, 2500, even $5,000 occurring right now. It's way premature for that. That's a couple years off. You should hold your core long-term positions, and in the short term you should wait for my signals before getting aggressive. You don't want to be buying, adding to positions at the wrong time. One other possibility here is, of course, the debt crisis. Look, the debt ceiling is going to be raised one way or another. It might be the 11th hour. So a lot of what's happening in the gold market right now is anticipation of no deal in the debt ceiling, and it's trapping a lot of the average investor, the Main Street investors, into these markets. And you do not want to be long, aggressively long gold when a debt deal breaks, whether that's today, this weekend, or the 11th hour on August 2nd, because that's likely going to trigger a sell-off in the gold market. And this is a bit of a sucker's rally in here, given the fundamentals that are developing behind the scenes. And the cyclicals, which do not support a massive breakout in gold at this point, or in silver. Now, in silver we've seen a sharp rally to over $40, but I say the same thing here. This might be a high. We might go a little bit higher to $42, $43, but this is not the bottom that I'm looking for. This is a rally. The crash scenario from May in silver is not complete yet. We need one leg down, one additional leg down. It will likely coincide with news on the debt ceiling, which of course is, if they raise the debt ceiling, which they will, that's longer term bullish for the precious metals and bearish for the dollars. It's just kicking the can down the road. But short term, everybody's caught up in the day-to-day politicking and grandstanding going on in Washington, and they're buying gold and they're buying silver, and they're nervous as heck, and they're walking right into a trap. And I'm almost positive that. In addition to that, the seasonals and cycles don't support runaway markets in gold and silver right now. So please be very, very careful in silver. In the dollar, we're seeing exactly the type of action I told you about. Completely sideways action. One day the euro is a little bit stronger, one day the euro is falling. One day the dollar is strong against the euro, next day the dollar is weak against the euro. The dollar has fallen to a new record low against Swiss franc. It's weak and near record in the Canadian dollars. It's losing ground against the Singapore dollar. The Thai baht here in Thailand, where I live, is strengthening dramatically against the dollar. And you've got to understand that the dollar is in a long-term bear market, and all the action that you're hearing about right now is about one sovereign debt crisis versus another. Europe's versus the United States. Europe's is bad, the euro goes down. U.S. is bad, the dollar goes down. That's what's unfolding there. The big granddaddy of the sovereign debt crisis will be the United States. This is just the opening act right now. Europe will probably get hit the worst in the next few months, and then it will migrate to the United States, and over the next 2 to 3 years you're going to see all hell break loose regarding the sovereign debt crisis in the United States, and you're going to see the US dollar lose its world reserve currency status. I want to take a look now at the Dow Industrials. This is, I find, very interesting. We got that move down to 11.8 earlier, late in mid and late June. We rallied, up to almost 753, 12.8. We now pulled back, and we're now starting to rally again. This market is showing you all the signs of long-term strength that it needs to show you. What doesn't go down either goes sideways or up. And this market does not like to go down. So that's a sign of its longer term strength, and the fact that most blue chip type stocks and big cap stocks are going to be commoditized or monetized and begin to act much like tangible assets in the months and years ahead as investors all over the world turn away from governments and their hugely indebted balance sheets and seek to put their money back in the private sector. Now, I still believe we could get down to another test of 11.8. We're going to swing wildly as we go into the rest of the summer and in the fall as well. So I'm not ruling out a test of 11.6, 11.4, even slightly below 11,000. But I will tell you this, when it gets down there, I'm going to position myself and my subscribers for the long term, where I have no doubt we'll see Dow 15,000, Dow 20,000 and higher over the next few years. Okay, that's it. Again, due to my travel plans, I've got to run. Please also be sure to attend our event today. If you haven't registered already, you'll find a link in one of the emails I sent you earlier this week. And please do attend our event at 12 noon today, where I discuss Asia's booming economies with my colleague, Tony Sagami. Till next week, this is Larry.